Hey, what's going on, gold and silver bullionaires? Welcome back to the Gold Silver Brief. Gold has made a historic breakout. The first of the precious metals, of course, to do so, but now silver is quietly catching up. And the signal we're seeing today is the same pattern that has historically followed every major precious metals cycle. So again, just to kind of recap and put things into perspective, gold has had a massive breakout over the past year and a half, almost going directly upwards. Silver has had a very similar breakout, but is lagging behind gold, which is very historically typical. But I believe that silver is gearing up to have a gold-like move in the coming months. And let's talk a little bit about why that is. The gold to silver ratio is flashing a familiar setup, one that often precedes a significant move in silver. Today we're going to break down what exactly that means, why it matters, and how this could shape the next leg for metals. Talk a little bit about the gold and silver ratio, something that is often kind of used as a fancy term. Some people don't really understand it, but it's really simple to understand, so we're going to go through that here as well. So if you look at gold over the last several years, we know, again, to recap, it's climbed from about $1,400 an ounce in 2019 to the record levels that we're seeing today that we just looked at a few moments ago. Silver didn't follow quite nearly as fast or as cleanly, but it is also rising as well. But that divergence is quantified by what is known as the gold-silver ratio, which means how many ounces of silver it takes to buy 1 ounce of gold. When gold outperforms silver, the ratio rises, and when silver catches up or starts to outperform gold, that ratio compresses. So let's take a look at this chart here. This is the gold to silver ratio, basically for its main recorded history, at least when the gold to silver ratio really started to be tracked and followed like any other stock or chart. The silver line that I've put here indicates this is a dollar mark around $31.50, $32. That is the last low we've seen, which hit back in 2011, April there, 2011, when the gold to silver ratio was around 32 ounces of silver per 1 ounce of gold. Now, what we're used to here recently, especially, and you can see kind of this more average $85 to $90 gold to silver ratio channel that has been really for the last decade and a half or so. And obviously, the ratio goes up and down all the time, but I made this line goldish, if you will, and I've made this line silverish, if you will, to give you a visual representation of like, hey, when we're way up here in the gold to silver ratio and where we saw it back during COVID, this indicates that gold is popping off and silver is really lagging behind. And again, when that ratio starts to compress, that's when silver is starting to pick up steam. And the levels here recently that we saw just a couple months ago, where the ratio got down, I would say between 50 and 60 ounces of silver per ounce of gold, we are approaching historic levels in terms of the gold to silver ratio. So again, historically, if we look even back further than this, all the way back centuries in some cases, markets used gold and silver together as money. We know this. Governments once fixed the ratio around 15 to 1 or 12 to 1, kind of depending on the era. And again, lowest levels seen in recent history, 2011, where it was around 30 to 1. When the free markets began determining the ratio, that's when this all became extremely volatile, but also an informative metric for people like me and people that care about this market and study it. Modern times, 1980 silver squeeze, the ratio collapsed back down into the teens. In the 90s and early 2000s, it rode a little bit higher as silver lagged behind. 2011 roared back, ratio dropped sharply. That's where we start this indicator right here that I just pointed out. And in March of 2020, amid the pandemic, panic, all that, it spiked at one point to over 125 to 1, the highest modern reading in history, where it would take 125 ounces of silver to equal 1 ounce of gold, meaning silver at the time was absolutely on sale. And that's where not only myself, but a lot of other people capitalized on this market. So the ratio tells us more than just price differences. This also reflects a serious market psychology. Again, looking at gold over the last 5 years, gold, traditional safe haven, it often leads the cycle to begin with. It's a more popular metal in general across the global landscape. So when we're especially talking macro uncertainty, it rises. Silver, partially driven by industrial demand, often lags behind, and that's what we've seen here recently. Gold had a dramatic run first, silver followed. It kept up, but it really sort of faded. And again, if we just kind of compare the last year, gold is not quite exactly straight up, but it is trending significantly higher. Whereas we look at silver over the last year, it has had quite a significant pullback. It definitely followed kind of the gold trajectory here, but a significant pullback, a bit of a correction, silver lagging behind like it typically does. Again, talking the gold-silver ratio in the early 2020s, again, ratio breached 100 to 1 as gold significantly outpaced silver, meaning it took roughly 100 ounces of silver to equal 1 ounce of gold. And as of late 2025, the ratio remained historically high above long-term averages despite silver beginning to rally. And experts in the space have been beginning to recognize and note that when that ratio again starts to compress, meaning silver gains relative strength compared to gold, it often signals a rotational shift in metals, and I believe that is what we're starting to see. As recently mentioned, we've seen this before, 1980, 2011, silver rally after gold's earlier move compressed that ratio again down to this level, and you can see this drop. And if we even pitch the 1-year chart, that gold to silver ratio down around 45 to 1 at one point, right now stuck around 60, which compared to recent years is still a massive gain for silver, indicating that, hey, we could be getting ready to see a bit of a second leg move here for the white metal. And if we just look at the silver chart here very briefly, as I mentioned in one of the recent videos, we had been seeing some really flashing overbought signals on silver. We did have a significant pullback, and I believe, of course we have talks today of tariffs and other stupid shit going on politically and globally in the government and world stage and things like that we're not going to get into, but all those things do play a role in what move the markets. This video will be coming out Saturday, February 21st, just FYI. So we did see a little bit of a run here. This was, here's 5-day chart in silver. So silver has gone on a little bit of a breakout here, but the news can really affect the intraday and intra-week trading. So I don't put too much stock in this. I'm looking at a 30,000 foot view of what is going on in the gold and silver space, and especially this right here with the gold to silver ratio that we've been discussing. So why now all of a sudden silver is catching up? Like, what's driving the market but behind all this? So industrial demand is growing. Industrial demand recovery, unlike gold, silver has significant industrial use. Global economy can stabilize and demand silver for technology, electronics, solar, electric vehicles. Silver gets bid in these circumstances, and I think people are really starting to catch on to that. Supply chain deficits. Silver has been in a supply deficit for years, and that obviously creates a tightening condition as well. Ratio compression. It's what we've just been talking about here. So when gold kind of stabilizes at these high levels, the next natural move historically is that silver catches up. So especially once investor attention shifts back to the undervalued asset, the more affordable asset to a lot of people, Doesn't necessarily mean silver will always outperform gold. That's usually not the case, but often in these cycles, markets often reward that lagging asset when the consumer sentiment, the investor sentiment starts to change, and that's what we're seeing right now. So you'll see this pattern again and again and again in cycles where gold rallies first, silver lags behind, and then silver catches up with a sharper percentage move higher. And that's potentially what is unfolding right now. So what does this mean for you guys? What does this mean for somebody that's interested in this space? What does this leave us with right now? When the gold to silver ratio begins to compress towards those historical averages, like we've been talking about here, and again, those historical averages, if we just look at this chart and zoom out a little bit, now this is TradingView since 1998, okay, so like what, 25 years, something like that, a little over 25 years, whatever, quick math. You know, the bulk of the price is right between 50, 60, obviously there's some exaggerated movements here during certain periods like we've discussed, 2011, 2020, etc., and what we're dealing with now, which you can't really peg it on one particular thing that's going on geopolitically or whatever. The world is fucked up, guys, right? We all know this. The world is fucked up, and you know, we're all trying to win the game in some way. So when we have this historical like 50 to 1, 70 to 1 historic ratio, silver tends to often outperform gold on a percentage basis. So if the current extreme reading contracts towards that range, silver prices could accelerate, and right now we're at 60 to 1, so we're like smack dab in the middle of this thing. And again, if we just look at the silver chart, we hone in on, 1 year. I mean, you zoom out and look at a 1 year silver chart, it's like, damn, like, did I miss the boat here? We could see a pullback. And I'm starting to think we're going to stay, over $50 for the foreseeable future. A pullback to $55, $60 would be nice, but there's a lot that would need to change in order to get to that point. So guys, this isn't just a prediction. It's not a prediction. It's just simply history repeating a very observable pattern. So guys, if you're serious about understanding precious metals more and you're interested and, gold and silver, this metals market is appealing and interesting to you, this ratio is definitely something that you want to keep on your radar. Again, that is the gold and silver ratio. And, again, I just put these indicating lines. Silver, so when it's lower, that means silver is performing better typically than gold, and when it's really high, that means gold is outperforming silver. It's very, very simple to understand. And the bottom line here, guys, is if you want concise, data-driven analysis on gold, silver, macro trends, cycles like this, please make sure you hit the subscribe button, turn on notifications. We are back, formerly the Stacking 3%er, now the Gold Silver Brief. I got a lot of good stuff coming for you guys, posting regularly. So don't miss the next phase of this market, and I will catch you guys in the next video. Thanks.